Everyone, we'll go live here in just a second. I gotta get all my bearings. Congrats, Bulls. So, we're going to see a short opportunity here in just a moment, but certainly don't want to step in front of this speeding train that is a blue sky breakout. Not a blue sky breakout, a short squeeze. We'll go live here in just a moment. Bulls are going to be trying to get in on a 5-minute higher low. Let's just see if we've got people joining in. All right, that's enough people. So, Bitcoin, short squeeze. What's the reason? I don't know. I haven't checked the news right now, and something happened in the last 10 minutes. But we did have earlier this morning the fact that China was talking about, their president talking about blockchain. That's always a bullish event. But I am looking at a falling wedge breaking out. And we had some members talking about short squeeze marking our monthly higher low. And I actually saw this pattern on the 4-day time frame for the first time, this falling wedge. And it was actually decisive enough that I said, all right, I had a target of 7,700 for the position that I entered on the oversold bounce at 7,311. And I decided I'm going to hold that longer term. And the reason being, this daily falling wedge is the 4-day time frame, along with the Bitcoin dominance chart also being in a falling wedge on its daily time frame, also trying to break bullish right now. Those two factors, along with the bigger picture perspective that we are looking for a monthly higher low to form, all were reasons that I said, all right, and it's a fairly small position. It was only 1 out of 3 orders that filled. I said, I'm just going to hold that. And so that's my position right now. I am holding that until probably a monthly lower high. We're looking for a monthly higher low to form, and we'll look for a monthly lower high somewhere in the $10,000 to $12,000 range. So what do we need from here? You know, this short squeeze is great. We need a 5-minute trend change. If we get a 5-minute higher low and higher high following through from this short squeeze, it's going to show us a ton of sustained buying pressure. That will continue to keep shorts on their heels. So again, whenever we see a short squeeze underway, we cannot let up and let the shorts cover. So if this is our top of the short squeeze right now and we just consolidate and then 5-minute equilibrium and then bear break into hourly consolidation from here, yes, it's a mini short squeeze, but it's not massive in the sense that it was only a little 10-minute move and then bears were able to reestablish themselves. If you want to keep those bears on their heels and see significant follow through, you have to see 5-minute bull flags and continuation, and that would be very notable. So let's now look from bigger picture on down. So we know monthly time frame, we're looking for a monthly higher low. Is this it? We'll need a lot more information before we can confidently say that our monthly higher low is set. Weekly time frame, anything under 88.26 is just a weekly lower high. So we are still in a weekly downtrend at this point, and we're $500 away from that resistance. Daily time frame, we have broken the daily lower highs. That's a good start, but we must see a daily higher low and higher high follow through from here. So essentially the bottom line is great move, definitely releases a lot of pressure on the bulls short term, but we need a lot of follow through. This impulse quick move is not enough. I need a daily trend change. I need to break 88.26, the top of our recent previous oversold bounce attempt. And you better believe there's bears piling in right now. So again, the best way to put pressure on bears that are entering on this move is continuation. So by the time we end this live stream here, maybe in the next half hour or so, we're going to have a good gauge as to whether or not this 5-minute move can see continuation. And I'd say if we drop back down under 8,100, then continuation is very unlikely. This yellow line right now is my falling wedge line. And if we reject, we're still in this falling wedge. So if we do not see follow through on this short squeeze, we are still within it. So let's now see where everybody else stands. So the Bitcoin daily dominance is still in a downtrend as well. Anything under 69.16 is a lower high. Follow through will be needed. So let's now look at all of our other coins and see how they are performing. We have obviously a big bull move on Ethereum. Why this is notable on Ethereum is that's a weekly double bottom. And if Ethereum can break 198 from here, again, it's going to take a while, but it's only 10% away. A little bit more than that. But if we can break 198 from here, we have a weekly trend change underway. That would be a weekly double bottom and then a break of the lower highs. That would be very convincing that Ethereum has given us our monthly high or low. So again, we are anticipating monthly equilibriums all over the place. And we are looking for signs that our monthly high or low has been established, and we will need more follow through, but this is a good start. So now let's look at the ETH BTC chart, who is performing better on this bounce. And we know it's going to be Bitcoin across the board because of how Bitcoin's daily dominance candle is looking right now. It's a big bull candle. It's at the top of the move. And we look at Ethereum BTC. It's still in a daily downtrend. Lower highs and lower lows. Anything under 225 was a lower high. We topped out at 219, and now we're looking back down at our recent low, and that Bitcoin dominance chart will continue to climb if ETH BTC drops down and continues this daily downtrend and this weekly pullback, looking for a weekly higher low to form. Checking in on Litecoin, it's going to be the same story. Bull move, absolutely. Breaking some resistance. Everybody will need a daily trend change. Is this our monthly high or low? We don't know. We need a bit more information. And if it is our monthly high or low, we would be looking for Litecoin to see a potential, I think I said in a recent video, an easy 50%. And I still stand by that. Again, we're not positive our monthly high or lows are set, but once they are, we will be looking for this equilibrium, and we would only have to go from $47 to $70. We wouldn't even have to see that big a move. But a 50% move off our recent low would require the bulls to make it up to there. It could even be a monthly bear flag, and we'd still see that 50% gain on Litecoin. So again, there is opportunity for bulls once we have these monthly higher lows formed. If we do see monthly equilibriums, that bull opportunity is not going to get better anytime soon than these monthly higher lows, because again, we will then anticipate potentially 6 months of monthly equilibrium tightening range. LTC BTC is going to be bearish. Big upper wick. Looking down at the recent low, it's not falling apart, but obviously this is Bitcoin's move. Other names are benefiting from it, but Bitcoin is seeing the most benefit. Let's now check our other altcoins that were holding up well. XRP, USD. So again, that's a convincing monthly high or low on XRP. The reason being the weekly. So we had our low, high of the bounce. Here's our weekly equilibrium that we were watching. That helped us look for a weekly lower high. And now it looks like our weekly higher low has formed. If this weekly equilibrium on XRP breaks bull, our monthly higher low has definitely formed. So we have key resistance at 304 and 327. And again, we pull up this monthly time frame and we have to zoom way in. We would be looking for a monthly lower high to form compared to the 50-cent range, but big gains even if looking for monthly lower highs. So names that have held a weekly higher low like Ethereum, like XRP, this is very beneficial. And their weekly setups are more bullish than names like Litecoin and Bitcoin that have dropped to lower lows. How is Binance responding? Binance weekly higher low is established. Break of 1917 would be a great sign for these bulls if that were to take place, because that's a weekly little higher low and then continuation, which increases the odds significantly that a monthly higher low has formed. We know we've been looking for Binance and this monthly higher low. And again, even if we set that monthly lower high, we are looking at a 50 to 100% bounce for that monthly lower high. After that, who else we got? We got Link that's been performing very well. So the link daily chart, higher low established on consolidation. We broke one resistance level, and now it's all about, we'll call it $3 flat, just that psychological resistance right behind 298. Bulls in control, not nearly as bullish as Bitcoin, but responding well. And this 5-minute consolidation on Bitcoin is keeping alive this potential continuation move. Otherwise, we'll look for a 5-minute equilibrium. Bulls will lose a lot of their momentum on this move right now if 8,200 breaks from here. So goal is to hold 8,200. And if we really want to put pressure on shorts, a break of 86 would do it. Who else we got? We got ZRX. ZRX on the daily time frame. So we had our high, low. We did double top, but we held the low of consolidation, and it's still in a fairly constricted range. So going to probably stay within this range for a while longer, not expecting any short-term volatility on ZRX. So it's time to pick your horse. We're looking for monthly higher lows. Which names are you going to be maneuvering yourself around for monthly higher lows? At this point, I only have a Bitcoin position aside from long-term no-touch positions. And I'm just going to set that stop at break even. Was fortunate enough for a really nice entry of 73.11. So not even going to think about that for a long time. And we'll see if we can position ourselves to be looking for entries. So if we miss this move and we want entries, we're looking for daily higher lows to form. There's no rush. There's no FOMO up here. It's not like the price is just going to run, 50 more % from here. We're going to need daily trend changes. So even just looking at Ethereum, we will top out eventually, and we'll have to form a daily higher low and higher high to confirm any weekly trend change if it does end up playing out. So again, we don't want to succumb to FOMO in the sense that the daily time frame, just zoom out, because yes, the 5-minute time frame looks explosive and it looks like huge opportunity. But you zoom out to the daily chart and you say, okay, big move by the bulls, but we still need daily trend changes. And if there's one thing that the MJ sector, the marijuana sector, has shown us in the last 4 months, it's that we can see big daily moves and big weekly moves and still not confirm daily trend changes. And just an example, let's actually look at the weekly time frame, just one of these names that pops into mind. This move on the weekly time frame, healthy consolidation on VFF. We're just looking for a trend change for a monthly higher low to be set. Look at the size of that big bull move. Weekly time frame, nice 65% move. We never changed the trend. Higher low, lower high, bear break. So if we can see big moves and not change trends, which is why we have to remain a bit skeptical of the bulls until they prove follow through. And again, not just follow through in a half an hour time window. I want follow through when things settle down, because that shows us continued buying pressure. And if we see continued buying pressure and daily higher lows and higher high forms, then that's going to show us that bears have their backs against the wall as far as just having pressure put on them. And then it shows us that there are a significant amount of bulls buying that dip. Devin from the group is pointing out that there is a CME gap open at 11,700. So that could potentially be our monthly lower high target if, let's just say for hypothetical purposes, if we were to make it back up to 12,000, let's see the range, it would be 13,000, let's just call that 14,000 to keep it nice and simple math, down to 7,300. So we're talking a range of about, 10,600 or so would be the midway point. And I know there's a retracement tool in here that I could draw with, but I don't know the hotkey off the top of my head. But that would be more than a 50% retracement, which would begin to favor the bulls on the longer term perspective. So from here on out, we're just watching, can we continue this move? Because if Bitcoin goes over 8,600, that's when we start to see a lot of bears underwater. Right now, with where we stand at 8,400, anybody that has entered Bitcoin bearish in the last 2, 4, 6, 8, 10, 12, 13 days of trading are now underwater. And a bunch of bears entered on this new leg down when we confirmed that weekly bear flag. But if we start getting over 8,600 and potentially 8,826, when we clear that level, we can then say anybody that has entered Bitcoin bearish in the last 1 month of trading is underwater. That's when you start to see short pressure. So we'll see how this 5-minute time frame ends up following through. It's looking like an equilibrium is the more likely scenario at this point. And again, if we do not change this 5-minute trend with a higher, or do not see follow through with a higher low and higher high, then that's when bears start to get confident in the short term. And then we'll zoom out. We know the zoom out game. We'll look for a 15-minute higher low, and we'll look for the exponential support. If we lose the 15-minute trend, we look for the hourly higher low and the exponential support. So if not in a bullish position and you want a bullish position, there is no rush at this point. And as far as bears, there's probably going to be, there's either an top fish opportunity off of 8,600 or a break. If we made a bearish entry on a break of 8,200, I would only be treating that as a short-term flip because the 5-minute exponential support would be approaching and we would just be looking for a 15-minute higher low to form. So definitely want to be very careful if you're playing bearish in this current big bull spike. Always just respect those stop levels because the last thing you want to do is get stuck in a short squeeze. And there's a lot of short squeezes going on today. Tesla's having a short squeeze. Amazon's squeezing shorts a bit. And I'm talking about stocks, of course. And now we're seeing it in the crypto space. So I'll now answer some questions. Looking at the YouTube chat. And pretty much we're just going to wait and see how this 5-minute pattern plays out. Binance already broke to higher highs, but didn't make an initial move as high as Coinbase did. So thanks for that. We're definitely looking for a 5-minute test of exponential support pretty much every time frame. And we just go one by one, just like we do when we're seeing an oversold bounce attempt. If we get over the 15-minute exponential resistance, we zoom out and then watch the hourly. RSI is your standard 14 period. XLM. So XLM is also still in a daily downtrend. So a lot of the names we looked at have broken their daily lower highs. XLM has not. So looking at 6477 resistance right now, and if we don't break that, it's just a daily lower high, and the bulls will have to see the daily higher low and higher high to change the trend. So if we cannot break 6477, still in a daily lower high and lower low pattern. Could this be a Bitcoin fake out? That's a good question. It is possible. Could it be a Bitcoin fake out before lower lows? It's just not likely. Is our monthly higher low set? The odds after today obviously increase on that very significantly, but we might not see bull follow through. Again, once this mood fades, if we just resort back to trading back down towards 8,000 and the upper 7,000s, it's definitely going to lose a lot of the excitement that the bulls are having in this moment. But as far as heading back down under 7,300, I don't foresee that happening anytime soon. In my opinion, what would have to happen for that to happen would be we top out, we set a daily higher low, we fail to break the recent top, and then we roll over. And that would take probably another week plus to play out if that were going to be the case. But I do believe that there's going to be a lot of bulls looking to buy a daily higher low once we top out. And the reason for that, we can just put ourselves in the shoes of bulls. Unless you were playing the oversold bounce, which a lot of bulls were not, understandably so if you don't like oversold bounces playing against the trend. So unless you're playing that oversold bounce or have a long-term no-touch position, bulls are not in a position right now. Other than the ones that maybe got stopped in on this move, but not a lot of bulls would have stop buy orders out there. So there's going to be a lot of bulls that are looking for positions on a higher low on the daily time frame, in my opinion. Next major resistance for BTC, it's all about 88.26 because again, as I just went over, right now on the daily time frame, anybody who's gone bearish on Bitcoin for the last week and a half is underwater. You clear that level, and anybody that's gone bearish on Bitcoin in the last month is then underwater. That's a big difference. So again, just watching this 5-minute time frame from here, this is going to give us some good short-term information. It's going to tell us if we consolidate for an hourly high or low from here, or if we have a serious squeeze-like move under our, I should say, on our hands. I already looked at link. So we need to, the comment about BTC isn't manipulated. If there is money involved, whether it's trading, whether it's politics, there's manipulation. We have to just accept that as part of the game. If there is significant money at play, there's manipulation. There's referees fixing NBA games. You know, it's everywhere. So yes, there's manipulation on Bitcoin. There's manipulation on the stock market. There's manipulation on the futures market. There's manipulation in the commodities market. There's manipulation everywhere money is involved. Just have that as a baseline assumption, and trading becomes a lot easier. Just in terms of psychologically being able to get over price action. Let's talk, okay, I like the talk of bearish scenarios because again, we're looking for monthly high or lows. What happens if we see a monthly lower high and lower low? That is a big red flag if that were to happen. This is our bounce, high or low. Let's say we bounce and top out at 11,000 and then roll over and break to a lower low. We're looking back down at our 3,000 level. That is worst case scenario for the cryptocurrency space, in my opinion, in 2020. If we see a monthly lower high and lower low form, we have to, at worst case scenario for the bulls, we have to see a monthly equilibrium that eventually breaks bullish. That has to be worst case scenario, because otherwise, if we do see a lower high and lower low, there is going to be another, in my opinion, crypto winter of bears having a lot of control. So if our monthly high or low is set and we start to bounce, let's say the candle closes today, it closes in another week, and then we break that 88.26 level, that's our monthly high or low being set. And that level, 7,300, is now the most important level in the cryptocurrency space for me. And I will probably exit long-term holdings, maybe reestablish them eventually, but I will probably exit my no-touch positions if we were to see a monthly lower high and lower low. So I just want to clearly state how very important this level is going to be for the next couple years if it is indeed our monthly high or low. So I obviously would prefer to have more Bitcoin than I have right now. I had 1 of 3 orders fill at 7,300. I had other orders at 7,200, 7,100s. So at this point, not going to touch it, break even stop, and going to shift that into a longer term position. And I may look to add on daily higher lows, just like a lot of bulls will look to do. But I have to take it one day at a time and see what consolidation looks like and see what volume behind consolidation looks like. We get a lot of information based on what consolidation looks like and the volume behind it. And that tells us the strength of the move based on how we pull back from that move. I personally don't think this is a reaction to any kind of death cross. Honestly, those are very lagging indicators. The people that use golden crosses and death crosses are not technical analysis traders, and if they are, sorry, in my opinion, they're not good ones. That's the kind of signal that they put on CNBC to help people understand technical analysis who have never heard of it or don't have any exposure or don't really understand it. It's very simple. It's a very significant lagging indicator, and it is not good to be trading with that indicator. I completely disregard golden crosses and death crosses because the trend has changed long before that happens. How long ago did we lose? I mean, the weekly bear signal, I don't even know what time frame you guys are talking about the death cross on. That's how little it matters to me. But the breaks are shown and the trend changes are shown so far in advance of those moving averages crossing. I don't think the bull volume is insignificant. This is only Coinbase and one exchange, but it's the highest daily bull volume that we've seen since our break from our weekly equilibrium. That's notable. The day still has, 7 hours left? It's going to be more than double average daily volume. If you guys, a lot of stock questions. If you guys want to talk about stocks live, we do that all day in the chat room. I just got done live streaming for an hour and a half. All stock talk. So Don says, if you think 13% is a big deal in crypto, you must be new. And it's not about percentage. It's about the psychology of the setup and where we are coming from. And it's about the bigger picture monthly high or low setup that we were watching for. And it's just a probability needle. Is our monthly high or low set? And I'm just making these numbers up right now. But if yesterday the probability was 40%, today the probability is 60%. That's a very significant shift. If I were long from 8K, I would probably want to exit on a break of 8,200. If we fail to see continuation and we break 8,200, that tells us that more prolonged consolidation is likely underway. 8,200 and 8,600 right now on Coinbase are the most important levels. Interactive Brokers is your broker of choice if you are in Europe. That's the standard answer. I'm going to put out that video. I've been working on it yesterday. I was in the hot tub yesterday with my notepad making notes about stocks, moving from crypto to stocks. And again, it's not going to be a call to leave the crypto space. It's just going to be providing more information to expose yourself to more opportunity. I highly suggest keeping funds on both crypto and stock exchanges. I understand people sometimes have to choose one or the other based on limited funds. We'll talk about all that in depth. Ideally, I want to have that out by Sunday. Keep an eye out for it. That's my goal. So bulls are keeping the door open for the potential of a continuation move. You better believe there's a decent amount of bears that have entered on this spike. So that would put any short-term bears underwater. What happens when you mess up big in bag hold? That should never happen. Just rule number one, stop loss. If you have a stop loss, you will never be a bag holder. I would so much rather have a handful of moves that I get stopped out on that would have ended up working out than have that one move that I don't stop out on and it wipes away 2 months of gains. I just don't see how you can be consistent for decades in this game without using stop losses, because there's no way to ensure 2 steps ahead, 1 step back, and continual progress if there's the possibility for 8 steps back on any single trade. If you are new to crypto, now is not the time to be buying. Establish a game plan from here. Whether it's hourly consolidation, whether it's a daily high or low. Buying now would be chasing after such a significant move. Another thing, someone just mentioned about wishing they heard that on December 2017. We have members right now that are going back and watching every single crypto video that I did in 2017, and they are gaining a ton of insight. One of them isn't even a crypto trader, and he is learning significantly from all of that content. And I don't think there is a better day-by-day trader diary in existence on the internet as far as just watching how a day trader who's making hundreds and hundreds of trades goes and treats everything from one day to the next. So go back and watch what it was like back then. And there is definitely tons of lessons in all those videos and worthwhile content. And I do love the fact that YouTube keeps those set in stone for historical reference. So it looks like a 5-minute equilibrium. We got our high, we got our low of the pullback. Lower high is now set at 85.10. We're going to look for a higher low compared to 82.10. If I were looking to day trade this move, I would potentially try and bottom fish 82.10. An example would be if I make an entry at 83.10 and I put a stop loss below 82.10, I'm risking $100. And if we end up breaking the equilibrium bullish, the reward of that potential is $300 to $400. So that's just a brief little putting the risk to reward scenario in your favor, risking $100 because you can say the reward if we were to break bullish, if we get over 85.10 and get over 8600 and your entry is 83.10, you're up 300 plus. So this could end up playing out another half hour before we get a break if we do get a higher low here. And on another note, the S&P 500 today is fractions of a percent away from the all-time high. So let's see if we've got euphoria in markets and confidence in markets adding confidence into speculative sectors such as Bitcoin. There's people who say that Bitcoin is a safe haven and is going to see action when there's fear in the markets. And there's people that say the opposite, that Bitcoin is speculative and it won't see significant capital unless there's significant gains and profits from other instruments, traditional instruments that can be dispersed to higher risk assets. I will not consider crypto dead if a monthly lower high happens. We're expecting a monthly lower high. The red flag would be a monthly lower high and then lower low. That's where things get hairy. And that's where bulls lose a lot of hope. The most likely scenario for me is that into Q2 2020. I'm going to be looking for something along those lines. Thank you, Danny. Glad to have you. This is not a monthly bull flag. The percentage pullback is too significant. And we can look at that. It's a bit like fib retracements, where if we see, let's say the move was 3,000 to 14,000. So we'll call that an $11,000 move, which means 8,600 would be a 50% retracement. So we pulled back more than 50%. If you want to see a bull flag, you want to pull back 30% or less. So as soon as we broke that low of the weekly consolidation of 9,000, and as soon as we saw no instant bull buying right after that bear break, that told us it was not a monthly bull flag. Again, could we see monthly continuation? Could we set a monthly higher low and go straight into a higher high? Absolutely, it's possible. It's just not the most likely scenario. Just like a bear drop from 14,000 to 3,000 was possible, but not the most likely scenario. Predicting this move? No, you can't predict that there's, you can predict when there's clear levels that everybody's watching. you could predict the bear follow through on this weekly equilibrium. Everybody's watching the same pattern. Everybody's watching the same level. That's when it's easy to predict the follow through on a move. But to come out of nowhere and see an insane volume spike out of nowhere, no, there's no way to predict that unless you are in the know and have some big time whale friends who are telling you that it's going to happen. So trying for this 5-minute higher low on Bitcoin. I do not believe in 95% of altcoins. There are definitely altcoins out there that will make it. I personally do not feel my picking odds are in my favor, so I have no interest in picking long-term projects whatsoever based on fundamentals. If we're looking at a 90% failure rate, an 80% failure rate, anything less than 50% or anything more than 50% for a failure rate means the odds are not in my favor. So I, as a trader, always in every single scenario that I put myself in, as a gambler, this is gambling, but if I can put the odds in my favor and continually do that time and time again, my winners will offset and outpace my losers. So I'm not going to put myself in scenarios where I have a 10 to 20% chance, and picking altcoins based on fundamentals falls in that category for me. I am still on Coinbase. It is terrible. Unfortunately, Binance US does not service the state that I am in currently. The fees on Coinbase are just, the fees in crypto world in general now, they were already absurd and now they're even more so absurd now that stocks are free trading, at least in the US. And it's literally thousands and tens of thousands of dollars over the year for some people that is zero in the stock world. So I'll be talking about that in the video as well. It makes it worthwhile when there's significant volatility, then it's worth paying the fees. But if we do not have significant volatility, it's not worth trading in the crypto space. And an example I just gave, before this volatility, this volatility for Bitcoin right now is great that it is back. But the example I gave was that we had an 8% range over 7 days. And during that period, Netflix had a day of 4% range in one day, and it traded $3.5 billion. So if you have that kind of liquidity and volatility that's matching the crypto space, you're going to have people choose to trade stocks all day over it. If you start seeing 10 to 20% moves in a day, then you're going to see people leave stocks, at least temporarily, and come trade the crypto space actively again. You don't see that kind of major range while you are in tightening ranges. You see that kind of major range when you're in new price discovery. Looking at different time frames right now. Just trying to see if there's a 3-month equilibrium, high, low, lower, high, trying for the higher low. It's going to get real interesting mid-2020 if the most likely scenario plays out. Pump is only sustainable if 8,200 can hold. If 8,200 is lost here, we see a lot of helium leave the balloon. It is a descending wedge. Again, this is the first time a wedge stood out to me today, literally this morning, even after posting my morning chart. Probably 3 hours ago, 3.5 hours ago, 4 hours ago, this chart stood out to me and posted it in the chat room and said, this chart is going to make me keep my position longer than I had initially anticipated. That being said, we are rejecting from resistance, and it is entirely possible This is a 4-day chart. It is entirely possible that we reject from resistance and then have to form our higher low back down in the upper 7,000 range, which is why there's no reason to FOMO right now. This is going to be the most important chart for me for the next probably 2 weeks. Unless, of course, we see continuation here and blow through 8,800s. And as I'm drawing these lines, I'm ensuring that no candlestick is closing above resistance and no candlestick is closing below support. I have never read a trading book in my life. It's just not my learning style. I learn through experience. I learn through YouTube videos and reading articles online and forum interaction with people on forums. I have never read a book about trading. That doesn't mean there's not great books and helpful books about trading out there. It's just not my style. I don't use MACD. What replaced MACD for me is the 12 and 26 period exponential moving averages. Those crosses are what have more of my attention in the crypto space. Trading the crypto space in 2017 changed how I trade stocks, and I incorporate way more price action. When I traded crypto in 2017, indicators aside from RSI and volume went out the window. Before that, in stocks, I was using MA50, MA200, MA10. And after it, I was just like, man, price action is all you need. And I took that back to stocks and I started having more success in stocks. So I brought the 12 and 26 period exponential moving average, and I brought the reliance on just price levels with trends and everything. And it, without a doubt, increased my stock trading performance. That's another one. I used to use Bollinger Bands every day trading stocks. I stopped. The cryptocurrency space morphed me and gave me a new style, and I stopped using Bollinger Bands on stocks. I definitely still think they're useful. I would never scoff at anybody that uses Bollinger Bands. I just didn't need them. If I ever get in a rut and start to have a multi-month losing streak as a trader, I'll start to tweak some things, and I'll probably... bringing Bollinger Bands back would probably be one of my first changes that I made if I had to make some changes. I don't use Ichi Cloud. I played with it a bit when I was learning and trying to develop my style, and it just didn't resonate enough with me to stay as a part of my trading tool belt. GDX video will be out this weekend with commodity space. The one last week is playing out really well. Pretty much best case scenario this week for what we pointed out last week, but it will be reliant on the FOMC Wednesday. So still patiently watching this 5-minute time frame. The good news for the bulls is we didn't see any kind of BART flush back down. If institutional money is going to be getting in, they will not do it on a move like this. They will do it on a slow grind. In my opinion, if you want to see institutional money getting in, go back to the bottom and look at the daily sideways range that we got. This is where institutional money is going to get in. They're not going to chase a 5-minute 10% spike. So volume continuing to drop off as the range tightens. Let's see if we can find a bit more clarity on a different time frame. Just going to keep it simple. 85.10 and 8600 are the resistances, and 82.10 is the support. If this move does not have follow through, again, we zoom out and we look for a daily higher low to form through this weekend into early next week. And we're going to look for that higher low compared to 7,300. And if this move is going to be for real at potentially being our monthly higher low, we will have to see the daily trend change and get over 88.26 after a higher low and higher high. Nothing wrong with taking profits. Not going to walk you through how I set up stops because that would be exposing my account to hundreds of people, which is not a good idea. Stop losses definitely take a lot of practice and they take a lot of adjustment, and you're going to get stopped out of moves. I get stopped out of moves fairly often, but again, it's the alternative. It is way better than the alternative. One of the biggest shifts in my trading consistency long term was starting to use stop losses. It's just essential. And again, if you go and ask, go and talk to anybody that's been trading for more than 5 years full time and ask them about stop losses. And you'll find probably that more than 90% of traders use stop losses because you can't limit your risk and you can't know what your risk to reward scenario is without them. If I were in this position, if I were in a move right here, my stop would be under 82.10, because if 82.10 breaks, we know that the odds of breaking 8600 and seeing continuation in the short term greatly diminish. We will still just be looking for a longer term higher low if that break does happen, but that will pretty much tell us not happening now as far as continuation. I do not journal. I used to. I reached a point where I did not feel it was necessary anymore, but I used to mark down all my trades, stop, level, entry, level, target, profit, level, any notes associated with how the trade ended up turning out. I like using a pen and paper. I feel it is better for memory retention as opposed to typing, but that's just personal preference. When I'm swing trading versus day trading, the biggest difference is it's prevalent in my brain as I'm doing other stuff. If I am not in a position, I don't care what the market is doing in the slightest when I'm not at my computer. If I am in a position, I care what the market is doing when I'm not at my computer. And there'll be times where it'll be the first thing I think about when I wake up the next morning. And I don't like that. So I prefer to not be in swing positions. For that reason, I want to leave it at the computer as soon as I stand up. Otherwise, it is too significant of a part of my life. I would not place a stop buy order over 8,800. If anything, if I were to enter on any kind of bull break here, I would look to just be flipping it for 1 to 2%. I don't like the risk to reward of holding any longer than just a quick flip at this point. The reason being, no consolidation on the longer term time frames. At that point, the hourly chart would have an RSI in the 90s. We know hourly consolidation is going to be coming. So it would just be a flip for, probably be in the position for less than a couple minutes. I do live stream while trading. I don't show my screen and show my orders and my account numbers and all that, but I commentate. I'm entering now, I'm putting my stop here. I'm exiting this position from yesterday. So I say as I'm doing things. I use market orders a lot. Again, fees definitely are a factor there. It's so much better to market buy stocks. No slippage if it's a liquid name. Doesn't matter if you limit buy or market buy, it's the same cost to you. Crypto will get there. Crypto's fees will drop. It's just going to take competition. I play both. When I play equilibriums, I will play within the equilibrium if the range is significant enough. Prime example is the tech sector in stocks, QQQ. This is when I'll play in an equilibrium. High, low, lower high, perfect playoff support, double bottom. There's your follow through. So if it's clear setup and there's great range inside there, I will play within the range. If it's a tight equilibrium, I'll wait for a break. If I don't feel the percentage move within the pattern will be worthwhile to play, I wait. I use Fidelity for stocks, but it depends where you're located. TD Ameritrade, Fidelity, and Interactive Brokers are probably the three most popular. And if you're not in the US, it's Interactive Brokers as the standard answer. So we're just hanging out until we get a break of either 86 or 82. If you're gonna play a long position, you're playing off 8210 support. If you're gonna play a short position, you're playing off 8600 resistance. And one of those trades is going to end up a good one with follow through. Question is, which one? The live talk that I do every day is focused on stocks as it's dictated by the stock trading day when I go live before the market opens and then before the market closes. But it's our website, chartguys.com. If there's crypto activity, I definitely talk about it. And I definitely go over Bitcoin every morning, but it's brief unless there's significant action and opportunity. Wow, no thumbs down. I know someone's going to do it now and be a jerk, but that's astounding. Go ahead, be a jerk. So you see the volume dropping off, very common with an equilibrium pattern, and there will be a volume spike that lets us know we're breaking the equilibrium pattern. Balancing trading with real life is definitely difficult. I have a bunch of videos on the YouTube channel. I think the playlist is called Lifestyle with Charting Man Dan, where I talk about it a good bit, the psychological aspect. Every course that we do, I put in a section about the psychology, because that is, honestly, that's the most important factor for me. As far as being a successful trader, psychology is the most important. Emotional awareness, emotional control, and psychological well-being. I live stream for stocks 9 a.m. Eastern to 10:30 a.m. and then 3:15 p.m. to 4 p.m. And then we have other moderators. Lori goes live Tuesday at noon Eastern. Jason throws in intermittent beginners live question and answer sessions. We have a Sunday live call to get set up for the week ahead from other mentors. You can see the volume bars are just disappearing. That's how we know we're getting closer and closer to a break. Thank you, Paula. Already went over XRP, but let's check in and see how it's holding up. Nice continuation. So we've got clear 5-minute higher lows and higher highs while Bitcoin's trading sideways, which means XRP BTC, I don't even have to look at it, it's in an uptrend as well. So nice bounce recovery is helping XRP see some follow through while Bitcoin's sideways. Again, an altcoin's best friend is sideways Bitcoin. So if we do see a monthly equilibrium, Q1 and Q2 2020 could potentially be a good thing for the alts. If Bitcoin is range bound, those altcoins have a lot of space to do their own thing. So if I'm an XRP bull or an Ethereum bull or a Litecoin bull, I want to see Bitcoin give us a monthly equilibrium. If I'm trading against BTC, that is. Come on, Bitcoin, do something. I'm not trying to sit here another half hour. I thought we would get a break by now, but obviously we're getting as tight as you can get. Zero fees is people like myself winning. It is the biggest win for day traders and short-term traders. I don't see anything negative about it. It's a free market at work. It was inevitable. I was just surprised that they went straight from $5 to zero. I thought they'd go to $3 and then to $1, but Charles Schwab threw down the gauntlet. Trading definitely slows down during lunch. People like myself get up from the computer and go eat some food and go clear our brains, and definitely need a reset. Can't do it consistently. When I first started the chart, guys, I didn't take a lunch break, and I would go from 9 a.m. to 4 p.m. And that was a great way to head straight for burnout. 7 hours in a row with no break is dumb. So we could look at Bitcoin on the 1 minute time frame here, and it's not exactly an equilibrium, but the range is shrinking. The 15-second chart will give us a bit more action. Gold's just seeing healthy consolidation. Just a volume climax top. Look at resistance. 1519. I've been highlighting in the videos every day, the market rundown videos, how the most important range for gold for me is right there. And we just rejected from resistance by under $2. FOMC Wednesday is going to determine short-term direction for precious metals. Not sure I understand the question about where do I get that it doesn't make a difference, limit or market order. I was probably talking about stocks where there is no fee for either, and there's tons of liquidity with no slippage. There is no wait list at the moment to join the chart, guys. We went through that wait list. When cryptocurrency exploded and the MJ sector exploded next to each other, we had 100 people joining a day, and that was just not sustainable for keeping things organized. So we had a wait list, and then over time we worked through it. I'm losing my voice here. I just did the hour-and-a-half live stream. We're coming up on an hour here. End of day videos, I'm going to be raspy. Shift is the one-click measurement. Make sure you're on the arrow in the top left. Hold shift and then click. Daily RSI was oversold at those levels. So the question is, in the previous two videos, I said I'm waiting for daily RSI oversold before getting interested in Bitcoin. And then the previous video, I entered on hourly RSI oversold. The daily RSI was oversold when we were down at my bids filling. So when the price was 7,300, the daily RSI was just under 30. The 4-hour RSI was in the teens. And the hourly RSI was in the teens as well. So if you got 4 hour and hourly in the teens with the daily just getting oversold, that's enough for me to start scaling in, because I know worst case, we'll get a 4 hour oversold bounce in the near term. Just RSI, not stock RSI. Might have to bail on this 5-minute pattern. We'll wrap up this live webcam. I'll be back tomorrow to check in and see where we stand from there. We'll end it with multiple time frame analysis. So you always start on the longer term time frame analysis and zoom in from there. We want to know what the bigger picture is, because otherwise I can look at the 5-minute time frame and it can be a beautiful uptrend and I can say, oh, I'm going to enter. We're in a 5-minute uptrend. But if I don't know that the hourly is just looking for an hourly lower high to form, that 5-minute uptrend is not going to last long. So you start longer term and go in from there. So the monthly, the reason I entered Bitcoin at 73 is because the monthly higher low, we're looking for that to form. And if I position myself where I'm entering at 73 and then we bounce and I put a stop at break even and then we drop to lower lows, I know, nope, didn't get it, not there yet, and I'll try it all over again as long as this is the most likely setup. So entering into weakness was only because of this monthly setup. I would not have entered Bitcoin if we had no price levels nearby and if we were at the low of consolidation. That's why I wasn't entering Bitcoin in my personal account down in the 3,000 range. I waited for the weekly trend change to go bullish Bitcoin because of the lack of price history. This price history gives me confidence to know what the most likely scenario is, because I've seen plays like this and charts like this hundreds of times, and I know what the most likely scenario is going to be from all of that library of previous history. As far as what the zoom out game is, if we lose the 5-minute uptrend, we zoom out and we watch the 15-minute exponential support and we look for a 15-minute higher low. If from there, we lose the 15-minute uptrend by setting a higher low, failing to break resistance and dropping to a lower low, then I zoom out and I look at the hourly chart and do the same thing. We look at hourly exponential support as a guide. We look for an hourly higher low to form. If the same thing happens, we fail and drop to a lower low, we zoom out to the 4-hour and we look for a 4-hour higher low to form. So it's just all fractals from one time frame to the next, giving us clues, and we have to know what's going on a bunch of those time frames to have the complete picture of how things are setting up. Thanks for answering repeat questions. All right, I can't watch this anymore. So I hope you all have a good rest of your day. This 5-minute time frame is going to dictate a lot for the rest of the day. If we break 8,600 and head up towards our most important short-term resistance of 88.26, it'll be very notable that we have continuation. If we don't, we play the zoom out game and we watch for our consolidation on all those time frames. And the bottom line is, wherever we do top out, whether it's at 9,000 or we've topped out already, we must change the daily trend into next week. Again, let's just say, like I said, let's say we got a shift now that it's 60% that our monthly higher low has formed. Change that daily trend and break 88.26. I'll tilt that up to 70%. So it'll constantly be shifting the probability needle. Thanks again, guys. Do good things out there. And we'll see you soon. Chartguys.com to answer all your questions about membership and all that. All that info's there.